And I'm Jess De Los Santos. It's the start of a new trading day, but first, let's go straight to our top story. Recent typhoons may have cost 90 billion pesos in lost output. That's according to NEDA. They are estimating that the five typhoons that ravaged parts of the country this quarter may have cost at least 90 billion pesos in lost output. NEDA Undersecretary Rosemary De Leon said this is equivalent to a reduction of 0.15 percentage points to the full year GDP. The economic team is now reviewing its earlier forecast of a 4.5 to 6.6% drop in GDP after the economy slumped to 10% in the 9 months to September. President Duterte has already placed the entire Luzon under a state of calamity due to the devastation from the typhoons. Despite this, De Leon said the government vows to remain fiscally prudent in its crisis response as it continues to try to restart an economy that has been heavily battered by the COVID-19 pandemic. She said the government will see to it that it will use all the tools available, noting that if the country stocks up on borrowing, it will be the next generation who will be paying for it. But Finance Chief Sonny Dominguez told Bloomberg TV that he sees no need to increase borrowings. He also said that the government's fiscal response remains on track, but the problem is the people's confidence in the system. Dominguez said they are now looking for ways to increase the public's confidence in not getting infected and making sure that they understand the health infrastructure of the country. All right, Dan, today is the D-Day for the Banco Central. What's at stake?
All right, so quite a lot because as we know, our interest rates are at an all-time low. That's at 2.25% is the borrowing overnight rate by the Banco Central. And it's very much related to what you had reported earlier on Finance Secretary Sonny Dominguez, basically saying the question here is not necessarily the liquidity in the system, but really the confidence of people to go out and spend. So marami namang pera, sitting out there for people to be touching, but people are not really using that money and preferring to stay home. This according to Yuben Paracueles from Nomura. Indonesia, which is also, by the way, seeing their central bank meeting decision today, together with us, are seeing a disappointing pace of recovery. So he's saying that the difference is the fiscal support in Indonesia is actually being rolled out, whereas here we have fiscal cliff risks. They've been flagging that, and these happen to be now materializing in the Philippines. There's especially when it comes to negative growth on government spending. So it's not just our consumption, which as we know is 70% of the GDP, but just the government spending itself has been seeing negative growth. Now, they have said that the cuts that have been happening by the Bank of Indonesia and in the Bangko Sentral ng Pilipinas have only had limited success in actually boosting the credit growth, especially since we still have the high number of daily infections. So consumers are still cautious. And of course, what's the purpose for cutting the rates? It's really to boost the consumption and also to boost the lending. Now, the central bank, according to several economists surveyed by Bloomberg and Business World, say that 13 out of 18 are predicting that the central bank will be holding. The rest are predicting a 25 bips cut. Now, this according to Nolan Arvis from HSBC. They say that they are seeing a containment of the virus domestically first, and when the economy reopens, these are prerequisites before additional rate cuts could actually have their full effect. So some analysts have said, there's no real point to keep cutting rates when people are still afraid to actually go out and when their economy is not necessarily reopened yet. Nevertheless, you've got Finance Secretary Sonny Dominguez also saying that even as the government is having difficulty stimulating demand, a big bounce back might happen, especially as we're hoping for that vaccine, Jess. Now, let's take a quick peek at our banks and how they're opening this morning. We are 4 minutes into the trading day this Thursday. This, according to the Financial Stability Coordination Council, they're saying that the Philippine economic recovery is going to be more difficult to attain because the banks themselves naman are also holding back on lending. So even if the banks have now a lot of liquidity, they've amassed it, it's not being mopped up. They have increased risk aversion to actually, lend to consumers. So it's both sides here. Demand is weak, supply is also risk averse. In fact, the bank's outstanding balance loans and receivables has declined since it peaked in April. You've got the largest monthly drop in July, and bank deposits naman are rising, which suggests that there is a lot of funding out there, but people are not necessarily picking up that funding. But you can see in our opening here that our banks are actually performing quite well. That's up by 0.4%. But again, we're still awaiting the decision that usually comes in the afternoon. One big sector that's going to be benefiting, so to speak, if interest rates might get lower, and that tends to be moving it together with the BSP decision, is the property space. Just want to take a quick peek on that. It's actually down very interestingly by more than 1% this morning. Ayala Land dragging down that sector by 1.7%. And finally, quick check on our local unit, the peso. This actually, surprisingly, despite that surprise remittance print that we had reported earlier on, did not necessarily move in tandem with that, but we are still seeing quite some strength this morning, trading at 48.25 to the greenback, Jess.
All right, Dan, let's zoom out a bit here and try to take a look at how the rest of the region is performing. Last night we did receive news that Pfizer has said, that the lead stage trial shows that their vaccine candidate is 95% efficient. How is that moving the region here? The same euphoria as last week?
Okay, so apparently not, diba? We were, all talking about that, and that should be something to be celebrated, so to speak, of course, with a lot of caution. But it does seem that the markets ignored that, or not necessarily ignored that, but focused on the risks rather than the benefits of the vaccine. But, this comes, of course, as they already announced this above 90% rate. So a lot of analysts have said perhaps the markets had already digested this news. There was already enough optimism on that front. And I just want to take a quick peek here at how our cases are standing worldwide. We seem to have ignored that for a while, but you can see that the net changes in the past day worldwide still 530,000 new cases, Jess, and 9,182 new deaths in one day, diba? So it's not necessarily going any better. Now, in fact, if we take a look at how Wall Street performed overnight, it's not a pretty picture. You've got the Dow Jones down by 1.2% together with S&P 500. They are actually under pressure as New York City shut down the schools because of the rising infection. So again, money managers remaining focused on the coronavirus data with these disturbingly high infection rates rather than that Pfizer news. And it seems that Asia is following suit here, seems to be opening in the back foot this morning. But let's take a quick peek at our own local index, because yesterday seemed to have such a good run up and we returned to 7,000. We are looking at a pullback this morning. We're down by 0.8% immediately here. So we are trading at 6,992.46. And that's after we followed, a run up of 1.3% yesterday. And this, according to analyst Stimson Securities, saying that locally there was positive news nga. The remittances were pretty good. The vaccine issues here. But Chris Mangon had already warned since yesterday that we might be seeing some profit taking towards the end of the week. So let's just take a quick peek at their sectors here. I'd already mentioned a couple of financials and properties going in the opposite direction, but most of the other sectors, services, industrials, and holding firms also seeing a pullback this morning. Now, just more on equities later on and specific stocks in the broadcast, but let's go towards, the agricultural space. A lot of eyes are in watching the damage of the recent Typhoon Ulysses on that. How much of a beating is this sector taking?
Well, for one, you have the agriculture department repeatedly saying that we have actually enough stock, enough buffer for the rest of the year to say that there's going to be sufficient rice supply until the end of 2020. But even so, they are projecting agri growth to actually be somewhat on the downside here for the rest of the year. Here you have Secretary William Dar appearing on agenda yesterday. He did say that from a 2% growth target for 2020, they are revising that to just 1.5%. Of course, the goal here is to always be better than the population growth, which is in the country that stands at 1.5%. But that's not going to happen this year. He's saying that the best case scenario would be a growth rate of 1.5%. Question is this going to be very worrisome for us? Well, you have to consider the fact that the agriculture sector was actually the bright spot in two previous quarters. You recall that in the third quarter, it grew 0.7%, and in the second quarter, it grew by as much as 0.5%. That's practically really impressive here, considering the number of segments, the number of sectors were down during the strictest lockdowns. Now, Dar says a big challenge is actually to grow. It's actually going to be a big challenge to grow despite the typhoons. You also have to consider a number of factors here. You have the African swine fever. At the same time, you have the poultry sector still on a recovery phase. According to him, the three typhoons we're talking about, Ulysses, Rolly, and Quinta, have so far damaged as much as 12 billion pesos in agricultural output here. Livestock and poultry has been down in the last 2 quarters. But Dar still is optimistic. He is hopeful for recovery in the fourth quarter, considering that, practically during the season, and the agriculture sector has been growing normally, at least in the fourth quarter of the year.
But Jess, are the experts in the industry saying the same? So are they on the same camp as Dar?
Well, a bit here, if I may say so, but you have the likes of Roy Kempis. He is a professor from the Pampanga State Agricultural University. He says that the sector is going to feel the cumulative effects of the typhoons in the fourth quarter here. Optimistically, he is expecting the sector to grow as much as 0.24 to 0.47% in the last quarter. But on the downside, pessimistically, he is saying it might actually just grow to 0.01%, or at the higher end would be at 0.23%. This attributing to the fact that, the Cagayan Valley is actually a major player in the industry here with an annual average of 2.30 million metric tons in output here. And at the same time, he's saying that damage in irrigation infrastructure could also be a limiting factor as to how the sector will grow in the last quarter. On the other hand, you have Glenn Gregorio of Circa. He is saying that they are projecting that Cagayan has actually lost as much as 880,000 in metric tons of rice produce due to the typhoons. Earlier projections actually put a 7% growth for Cagayan at 1.1 million metric tons here for the last quarter. But according to them, Ulysses has managed to at least damage the industry in Cagayan by as much as 12%. The DA so far is reporting that there has been 946 million pesos worth of agricultural produce lost, rice accounting, in fact, for as much as 760 million pesos. Now, Raul Montemayor of the Federation of Free Farmers is saying, is more optimistic. He is saying that the bulk of palay has been already harvested before the typhoons, considering the time that, harvest time was actually for rice, harvest time for rice rather, almost finished just in time when the typhoons actually arrived. Question now is, how long will the impact last? Well, Roy Campus is saying that there will be lingering effects, such as less corn and rice output, and at the same time, a later cropping period for farmers, depending on how fast the floods will actually recede. At the same time, you have to consider the time it will take to actually repair the facilities, and at the same time, expect an increase in farm gate and feed prices. Now, Glenn Gregorio, on the other hand, is saying what's needed really at this point is a massive financial assistance for farmers to actually help them bounce back.
Well, just definitely something that we did not need another, state of calamity here in Luzon. Now, we'll have more of the news when Business World Live returns. Stay with us.
Good morning. You're still watching Business World Live. I'm Jess Delos Santos. NEDA says the contraction in OFW remittances this year could be much lower than previously forecast. September inflows clocked in at $2.6 billion, marking a 9.3% increase year on year. That reversed the 4.1% decline seen the month before. Now, in 9 months to September, remittances are still down 1.4%. But NEDA is more optimistic now, saying the year decline could be less than 2%. as earlier forecast by the BSP. For one, Undersecretary Rosemary Edilion says Filipino health workers abroad are expected to retain their jobs during the pandemic since they are deemed essential to their host countries' economies. If accurate, the trend reversal will be good news for the Philippines, as we typically count on remittances to drive household spending in the country. Now, despite the pandemic, cash utilization of government agencies remained weak in the first 10 months, according to data from the Budget Department. This prompted the DOF to direct agencies to ramp up their spending in the remaining weeks of the year. The DBM reports that agencies used 2.7 trillion pesos from January to October, or 77% of the budget released during that period. This is lower than the 93% utilization rate recorded the same time last year. Finance Secretary Carlos Dominguez is now calling for a meeting of the Economic Development Cluster to prompt agencies to hasten spending for the rest of the year, especially for anti-COVID and typhoon rehabilitation efforts. DOF notes, though, that cash utilization rate remained low by October because the total cash released already covers the requirements for the rest of 2020. The COMELEC reported the highest usage rate of 84%, followed by the Office of the Vice President and other executive offices with an 82% utilization rate. Meanwhile, the Foreign Affairs Department saw the lowest rate after using only 44% of its cash allocations.
The Trade Department has so far extended 1.2 billion pesos worth of loans to MSMEs. Now, this is only a fraction of the 10 billion pesos provided under the CARES program of the Bayanihan 2 law. Loans granted have assisted over 1,600 small businesses so far, while more than 26,000 loan applications are still pending approval. Now, during the plenary deliberations of the 2021 budget yesterday, Senators Sonia Angara and Francis Pangilinan raised concerns on the matter, saying the Bayanihan 2 funds should be assisting around 100,000 MSMEs and 200,000 workers. The DBM clarified during the session, though, that they have released 8 billion pesos to the Small Business Corporation, but SB Corp was only able to approve the mentioned 1.2 billion pesos worth of loans. Senators are now asking the government to speed up the process of releasing funds for MSME loans as the Bayanihan 2 law will expire on December 19.
All right, the country's BPO industry isn't keeping its prospects rosy for the year, expecting the industry to miss its growth target. Now, to talk about the BPO space and their prospects, we have Arvind Appavu, CSS Corp country head and vice president. Good morning, Arvind. Great to have you here with us on the show.
Morning, Jess. Thank you for having me on the show. Pleasure to be here.
All right, so first things first, how are you guys doing here? You have, of course, like what I mentioned during the intro, you have the sector, IBPAP for one, expecting the industry to actually miss their growth target of 3.5 to 7.5% for the year. They are, in fact, saying that there's 120 billion pesos in lost opportunities. How has the industry adopted, particularly you guys over at CSS?
Yeah, it's been a challenging time for the industry. There are certain industries that have taken a beating because of the pandemic. As an organization, though CSS, we're heavily invested in the technology and telecom space. Those are the customers that we predominantly work with. So it's actually been good for us. We've actually doubled our workforce. We've added a little over 1,000 people during this time. So it's worked out well for us, but as an industry, there are certain spaces that have taken a beating. So it depends on which space that you're working in. So the cookies crumbled right for us.
Okay, the cookies crumbling right for you guys, but at the same time, it's very interesting to note. You did mention telco and tech space. Are you saying that these industries are somewhat recession-proof, and why is that?
Absolutely. With everybody working from home nowadays, right, the dependency on technologies have drastically increased, right, with right from basic necessity to everything being done with the help of technology. So spaces like the telecom space, the media space, the high-tech verticals are doing extremely well. These, like you rightly said, can be called the recession-proof industries, right? And as we move into 2021, I think these are the industries, along with maybe the healthcare vertical, that's going to have significant opportunities for the BPO space.
All right. Moving on from there, what's also interesting here is that you have the industry saying that capacity has so far increased since lockdowns were eased rather. We're talking about 95% in capacity growth here. Is this the same for CSS, or did you have to at least cut down on your number of employees?
We've not let go of a single employee of ours, which I think is a silver lining in this time, right? We're one of the few organizations globally that's also provided increments to 8,000 of our staff. And as I said briefly earlier, we've actually doubled our workforce in the Philippines. We've added a little over 1,000 people during this time. I guess because of the industry that we work in and our focus and investments in the digital space as well, this has worked out really well for us. This is a time in the industry that where I say, it kind of differentiates the lions from the lambs, right? If you're nimble enough, you are able to create opportunities and really thrive in this space. And that's how we're viewing this, as an opportunity to expand our footprint.
And can you give us more details? How exactly has, not to make light of the situation, but how exactly has the crisis fast-tracked your digital acceleration and your move towards automation?
But again, not to crack a joke on this lines, but I call coronavirus the mother of digital inventions, right? All these conversations around digital journeys that have been in boardrooms that were, in the 5-year plans are here now to be done now, right? Well, a good thing is, as an organization, we've been heavily invested in the digital space, and we lead in with a lot of our digital solutions, not to replace people, but to augment what the Filipino workforce brings in, right? So I want to also make that very clear that the digital journey that organizations is to empower workforce to become better and not to replace them.
But like what you mentioned, there's been so much fear about how automation eventually will actually lead to job losses here. But more on that digital acceleration move here, has that helped at least in how you transition to work from home setups?
Absolutely, absolutely. Because we've been heavily invested in digital technologies, right from recruitment to onboarding to our engagement to our day-to-day operations management has been 100% digital. So that kind of approach has really kept us in good step during this time, and we're reaping the rewards of it. We're also very bullish about what's coming up ahead. We've seen double-digit growth sequentially quarter over quarter here in our Philippines entity, and we're very bullish that that's how it's going to be through 2021 as well.
Okay, quite bullish figures here for the rest of the year and up to 2021, but also one exciting development here is the signing of the Regional Comprehensive Economic Partnership here in Southeast Asia. How do you think might this actually help boost the performance of the sector as a whole?
Jess, I think everybody is realizing that the BPO sector is going to play a very, very important part in the economic revival. We employ the maximum number of people at this point in time and have been able to sustain these jobs during this period. So I think with the recent developments that you just spoke about, it just amplifies the need to make sure that the BPO industry is taken care of. We do need more help. We need more help from various bodies. But I must say, PEZA has been brilliant for us during this period. Long may that continue. But yeah, exciting times, and I do hope with the developments, the BPO industry does thrive, and I am hopeful of it.
Okay, and then lastly here, Arvind, the growth of the sector has been pretty much predictable prior to the pandemic. It's something that's always been expected here even when the POGO sector came into play here. Is this still the case here come 2021? Do you see growth in the sectors to still be quite predictable, to still be on the same trajectory, or is it going to be an uphill climb here?
See, there are going to be challenges, but there are going to be a ton of opportunities, right? Organizations that continue to be nimble, that continue to adapt, that continue to embrace the digital journey, that continue to invest back in their people are the ones that are going to thrive, right? And you're also going to be very careful of the industries that you work in. As I mentioned, being in the technology space, in the telecom space, these are industries that are going to grow. I think industries like the healthcare is also going to thrive. So, 2021 is going to be challenging, but there's going to be a lot of opportunities if right investments are done and there's a focus on the industries that we just spoke about.
All right, lots of optimism there, at least for the rest of the year and even up to 2021. Thank you so much, Arvind Kingsley Appavu, CSS Corp Country Head and Vice President.
Thank you so much, yes. Have a good day.
All right, guys, just a quick peek on some specific stocks I wanted to touch upon. Let's take a look at AC Energy here. That's at 5 pesos and 6 centavos. So it's up by 2 6/10%. And take a look at that uphill climb here on my terminal. You can actually see in the past 3 days, it's been quite a ride for AC. That's up by 18%. Yesterday was at a record high by 9.9%. Now, this according to Rachel Cruz of APSEC. Investors are buying the stock. They're focused on their plans to expand the AC Energy's capacity. Now, recall their goal is to become Southeast Asia's largest listed renewables platform by 2025. And this, of course, comes after the board approved a 20 billion peso investment from Singapore's GIC affiliate Aaron Limited investment that's going to have a 17.5% stake in AC Energy. Another piece of news there is they've set a tender offer. They're also doing a new notes offering. This is related to the senior green bonds, which is going to be upsized to $2 billion in a note program. So quite interesting there, green bonds for AC Energy as it continues that rise up. Another that I wanted to check in on are the airlines. There's going to be some new openings when it comes to the flights here, and that is going to be to Bohol. So local airlines will be transporting tourists soon to Bohol. Philippines Air Asia is saying that would resume flights from December 1. So it's going to be even offering some discounts here for travels until 2021. You can see Cebu Pacific up by 4% here, PAL trading up by 0.09%, and Macro Asia also enjoying a 5% run this morning. And let's just end the broadcast with a look at how our index is performing. Good news would be that we are back above 7,000 levels. Bad news, we're still sliding 0.6% from yesterday's highs. But nevertheless, will we be sustaining that? Let's take a quick peek at which ones are actually the best performers of Thursday's trade. We do see it, some of our biggest banks here. BPI leading the charts. It's up by 2 7/10%, together with Metro Bank and BDO in the leaderboard. But you've also got some worst performing stocks here. A couple of heavyweights in the Congo space, AC and SM Investments dragging down the index. But the worst performer happens to be Mega World, down by 2 8/8% this morning. And that's the first look into the business day. Today's November 19. I'm Danie Laurel.
Catch us again tomorrow at 9:30 a.m. I'm Jess Delos Santos. We are One News.